Welcome back to our ultimate masterclass. Today is a day for the history books. On Thursday, the 26th of February, the ASX 200 shattered all previous records to close at 9,175 points. This isn't just a number, it's a testament to the momentum building in the Australian economy. In just 5 trading sessions, we've seen a gain of nearly 1%. This record run comes amid supportive global cues, but what's really interesting is the volume and the sentiment behind the move. At V2U Research, we look beyond the ticker. We look at the heartbeat of the market. The spark that lit the fire today came from across the Pacific. Nvidia, the global giant of the tech world, reported record revenue and guided for first quarter sales of a staggering $78 billion. This guidance didn't just help Nvidia, it recalibrated investor sentiment across the entire global technology landscape. Locally, our information technology sector caught that wave and sprinted, closing up a massive 5.19% for the session. For those following our systems over symptoms approach, this wasn't a surprise. It was the global tech narrative manifesting in our local markets. It was a broad-based rally, with 7 out of 11 sectors closing higher. Consumer staples, telecommunications, and healthcare all showed significant strength, each gaining over 1.5%. This tells us that even while chasing growth in tech, investors are keeping a firm foot in defensive sectors. Consumer staples and telecom both added 1.61%. In the Australian context, these are our mango trees, sturdy, reliable, and providing consistent yield even when the broader market is volatile. They provided the essential support for today's record run. Healthcare advanced 1.58%, while A-REITs, or Australian Real Estate Investment Trusts, gained 1.16%. This broad participation is exactly what we like to see in a healthy, record-breaking session. It's not just one sector carrying the load. The materials sector also benefited from the surge in major mining stocks. BHP Group, the big dog of the ASX, rose over 2%. Ongoing investor interest in resources continues to be a pillar of the Australian market's strength, even as we see minor profit-taking in the gold sector. Turning to individual names, Megaport and Telix Pharmaceuticals were the absolute standouts. Megaport jumped over 12%, while Telix climbed over 10%. These are the kinds of moves that can transform a portfolio, and they highlight the incredible opportunities currently present in the mid to large cap tech and biotech space. DroneShield was another major winner, advancing nearly 9% after announcing 6 new contracts valued at approximately $21.7 million. This is fundamental catalyst analysis at work. When a company proves its product-market fit with new contracts, the market reacts. IDP Education rose 7.6%. Their commentary on margin improvement opportunities in student placements and English testing really resonated with analysts. It's a great example of how operational efficiency can drive share price performance. However, it wasn't a perfect day for everyone. Qantas fell 9% after reporting higher operating costs. This is the interest trap equivalent for corporate Australia. Rising costs eating into the bottom line, combined with uncertainty about the US economy, it's a reminder to always manage your risk. Worley also ended much lower, falling 10%, while the energy sector dragged as global industrial sentiment cooled. In a market hitting record highs, these laggards highlight why we don't just buy the index. We look for quality through the V2U research approach. Let's step into the technical masterclass module. When the market hits records, technical indicators are your best friends to determine if the trend is sustainable or if we're due for a correction. We want to separate the heartbeat from the noise. Our RSI, or Relative Strength Index, is currently at 65.37. This indicates strong bullish momentum. Think of it like a speedometer. We're moving fast, and while we're approaching the overbought zone, we aren't quite there yet. The trend is still firmly up. We view support levels like a trampoline. Currently, the index is sitting comfortably above the 9,022 level. If the price dips, this is the floor that historically helps it bounce back. Surpassing the old resistance at 9,105 has opened the door for this record run. Now, let's talk psychology. Record highs often trigger FOMO, the fear of missing out. But at V2U, we teach systems over symptoms. Don't chase the green candles. Instead, stick to your plan, manage your risk, and wait for your specific setups. Patience is your greatest asset in this market. This is where the V2U Insight Engine comes in. We use a global network of analysts and proprietary data to give you the clarity that others miss. We look at the macro trends, the micro catalysts, and the technical signals to provide a comprehensive view of the Australian share market. Looking ahead, the global stage is waiting for U.S. initial jobless claims, which will tell us a lot about the labor market health. Domestically, we're focused on Australia housing credit data. These are the weather forecasts that will dictate the market's mood in the coming days. If you found this masterclass useful, please like the video and subscribe to the channel. Share your stock watch list in the comments below. Which ASX stocks are you tracking this week? Let's build our wealth together, responsibly. At V2U Research, we are committed to providing you with the insights you need to navigate these record highs. Join our community for regular updates and educational content. Thank you for watching, trade responsibly, manage your risk, and we'll see you in the next update.
Disclaimer: the information contained in this publication is general in nature and has been prepared without taking into account your objectives, financial situation, or needs. It is provided by Titan Security, holder of Australian Financial Services, license number 307040. It is not intended to constitute personal financial advice. Investing and trading involve risk, and past performance is not a reliable indicator of future performance. You should consider your own objectives, financial situation, and needs before acting on any information contained herein. You should also read our financial services guide and, where relevant, the product disclosure statement and target market determination issued by the product provider. These documents are available upon request. Titan Securities accepts no liability for any loss or damage arising from reliance on this information.